every time, guys, you guys need to think about it this way. Nah? Think about it from a normal human psychology kind of way. Think about it if it was you. Let's say you take a loan out with any bank. I'll say F&B for lack of a good word. Say you go in F&B, you take a loan of 1 million because you want to start this business that you've been wanting to start. Now, obviously, that loan is going to have repayments on it every month, okay? You're going to have to pay that loan back in installments, okay? Every time the interest rate goes up, your installment goes up, all right? That means that you've got more debt obligations as a business. Now, if your debt obligations have been budgeted for and you have a fixed income in your business, let's say that fixed income is 10 Rand for the sake of easy maths. And now because interest rates go up, now you have to fork out 14 Rand, all right? You need to find that 4 Rand from somewhere else in your budget. And if you're running a business, you are less likely to hire more people in that kind of environment. Instead, you'd be considering laying off one employee just so you can restructure and you kind of, rebalance your books so that you can afford to service your debt obligations, all right? And that's what's happening to the whole economy as a whole. What I just described is sort of like a microcosm of what's happening in the whole economy. Because interest rates are high, businesses are starting to lay off people. We're seeing new jobs or new positions become less and less available. And so this is bringing the economy sort of like to a cooling slowdown. Okay, and that's the effect of interest rates. Now, the first risk when all of this began was the recession. No, not the recession risk. It was the inflation risk. Okay, the Fed's mandate was to fight inflation, and they've done that. And they've done that by slowing down the labor market. And now that inflation is going down closer towards a 2% target, they don't want to hold that interest rate at those high levels for too long, because what that's going to do is that it's going to exacerbate mass layoffs. We're going to see companies retrenching people. We're going to see a big slowdown in the labor market, and that means now that the risk is no longer inflation. Now the risk is growth, all right? And what the Fed has to do, it has to find a balance in between those two risks. All right, you guys understand? So in essence, we're at an inflection point right now, and I'm going to wrap it up nicely with a nice little bow here. And if you guys were watching Jerome Powell on Wednesday when he was speaking, the most bullish comment he made was this: that the Fed is prepared to cut rates even as it gets good economic data, guys. Whoa. Now, in order to kind of understand where we're going with this entire narrative, you kind of have to understand the link between what the Fed is looking to see and what the market is pricing in. There's 2 more NFPs left before the next FOMC, all right? There's also 2 more CPIs left until the next NFP. And those are the most important metrics that the Fed will be looking at. So if we get low employment data today, guys, I'm bullish on risk assets all day. I'm bullish on risk assets all damn day, guys. All right. Now, if we get a higher number on NFP, because of the comment that Powell made on Wednesday, saying that the Fed is still prepared to cut rates even as it continues to see strong economic data, because that's what the whole soft landing narrative is about. A soft landing is about seeing good economic data while still bringing down inflation. So long story short, guys, here's what you need to look at going into the next 3 to 4 months of the year. We need to see CPI continue to go down. All right. Shout out to Miss YC. Bullish on risk assets, baby. All right. So, babe, you just interrupted me, and now I lost my train of thought. So, damn, guys, my girlfriend, she's watching right now, and now I'm just losing my train of thought. All right. So, we're looking to see weaker CPI data. As long as we continue to see inflation coming down, then it doesn't matter if we get a high NFP. It doesn't matter if we get a high retail sales. It doesn't matter if we've got growth in GDP, all right? And that's why I'm saying that there's gold in the policy statement that Powell made, guys. So I'm bullish on risk assets, and I think it's the best scenario for the dollar. The only thing that can rescue the dollar right now, in terms of if you are of the view that the dollar is going to go up, there's certain things that need to happen. You need to see an upside surprise in terms of inflation. All right? Hello Mark says, Basani want to disturb. Which you want to disturb? But Joe, I was in the zone there. I was flowing nicely, and then she just had to come on. And when I saw that name, god damn. If you guys saw my shorty, you'd understand, man. My shorty's the best in the city. But anyway, before I digress, let's go ahead and give the signal. Let's go ahead and give this. Well, not the signal. Good God, what am I saying? Definitely not the signal, because we're not here to give you guys a signal. We're here to give you some guidance on what we are seeing in terms of the potential for the dollar to strengthen or weaken. Now, if you guys are looking at risk assets, particularly indices, so what Jason and I trade is usually the NASDAQ or the Dow Jones. I'm going to do some technical analysis on the Dow Jones for you guys real quick. All right, just to satisfy some of the technical traders in here, because I know some are not satisfied up until they see a chart. All right, so I'm going to do some technical analysis on the Dow Jones, and then we can call it a wrap. All right, Mr. Noah.
Yo, what's up, man? What's up? Are you guys enjoying the session? Are you guys learning? Are you taking notes? Which is very important, because you guys know what's up. Today it's NFP, man. It's NFP. Let's make some money, guys. Let's make some money. January was tough.
Hey, it was tough, my brother.
Yeah, but the whole year won't be tough, okay? It's only January where the struggle is, guys. Don't worry. Alright, so are you done?
Not yet, not yet. I'm going to do some technical analysis for them on the Dow Jones, so they can just get an understanding of where we are potentially in the race. Okay. All right, ladies and gentlemen, we've come to that part. I'm going to do some technical analysis for you. Let me just flip my camera. All right, let me just take it off the stand real quick. All right, if you guys are looking at the Dow Jones, all right, it is moving inversely to the dollar. All right, we had that low over there, higher high, higher low, higher high, higher low, higher high, higher low, new high, new low, new high, new low, new high. This is still a higher low, ladies and gentlemen. We are still bullish, even though we have broken outside of this trend line. All right, actually, what you'd want to do, and what I recommend, guys, I always tell this to my students, guys, you need to be fluid and to move with the market. Even though we had a trend line breakout there, if you connect this and anchor it to a different point on your price action, you will actually find that we are still in an uptrend in as far as where this pattern comes from, guys. So there's something really, really important that I tend to teach most of my students, and that is something called pattern separation. If you can separate what's happening here from what's happening here, then you have a better picture of what's going on. And now we can separate it. We clearly have a descending channel there. All right, we clearly have a bullish reversal pattern that had formed down here on the low. All right, we had a break of structure. I'm gonna show you right now. Where is that motherfucker? All right, we clearly had a break of structure here. Clear break of structure right there. Lower low, lower high, lower low, equal high, and there's the range right there. All right, so we've got our range. Let's create that range right there. Okay, so we've got the low of that range sitting right over there. All right, now you've got that anchor point. Outside of this structure, there's the breakout. We have our first new high, and that's where I anchored the trend line. You guys understand? All right, that's where I anchored the trend line, because this is a new story completely from what's happening here. All right, This is a part of an older story that's further down to the left, all right? And so that's why pattern separation is so important, because then if you anchor the trend line from here and join with this one and join, you'll find a breakout there. And that would have given you a signal for this sell move down here, all right? But for this buy that we got yesterday, if you look at my stories, if you go to my stories, you'll check, I actually gave out a screenshot where I took a buy on the Dow Jones right over there, using the healthy understanding. You see the way I just broke down the fundamentals and made them link with the technicals. That is what you're supposed to be doing in your trading journey every day, guys. The chart that I'm looking at the US 30. So again, I'll reiterate, pattern separation is so important, guys. We've got a whole reversal pattern happening here, structure, right? We've got the break to the upside, breaking the previous lower highs, creating a new high right there. And that's where we start the trend line. You can, if I zoom in actually here, you can see that's where it starts. First bounce there, second bounce there, third bounce there. Here's our next bounce, right over there. And look at where it corresponds to. Boom. Bullish on risk assets, guys. I keep saying this. I'm not fucking around. We're serious here. All right. Does that make sense, guys? Does that make sense? I hope I've provided some sort of an in-depth analysis. We're not here to look good and, drive nice cars and, just look good on the fucking gram. We're here to impart some knowledge, and I hope that this presentation has kind of done that and kind of benefited you in a helpful way. Now, so that's what's already happened. Let's look at a potential trade idea, okay? What we could be potentially seeing in terms of how the market could play out. All right, let me just take a screenshot of this so I can draw on it. All right, shout out to you guys. Shout out to you, man. You guys have been so kind. Thank you. All right, this has been a really, really good. Mlungisi says UP English. Of course, sir. We're well educated. We're some well educated niggas up in here. Gang banging is a thing. Gang banging is a thing of the past. Gang banging is a thing of the past, guys. Only thing that matters is if you're making some cash, right? All right. Now, let's look at some potential trade ideas, guys. All right, some scenarios. I'm analyzing the Dow Jones. All right, we've already spoken about our anchor points. We've got the structure over here where we had the break of structure over there. We broke above this level over here, creating a new high. Okay, that's our first anchor point. Market then created a secondary high over there. It's our second touch on the trend line, and that's where we got that big buy yesterday on those lower initial jobless claims. Okay, I mean higher initial jobless claims, which showed a significant slowdown in the labor market. Now, current price action, we have a high over here. All right, there's our high. Okay, this level is coming to retest. Now, a question that I have for you guys: how many traders do you think are sellers in this area over here? All right, and where are all their stop losses? They're all above here. All their stop losses are above that area. What do you think this price action is going to do? It's going to ram up, hit the stops, sell off, boom, bullish on risk assets all the way to the top. That's the move I forecast. All right, we're going to liquidate those sellers first, all the early sellers, because especially if NFP comes out higher, guys. If we get a higher NFP, we will see this slight strength in the Dow Jones, but then you'll see dollar strength come back in there, boom, and then boom, we're out. And if that scenario doesn't happen, then we have to look at where our previous higher lows are, and then we're looking at basically these levels over here, that level over there. All right, so we could find a move up into the zone, boom, boom. All right, still bullish on risk assets even in that scenario. All right, our third scenario is a move up and then coming back to meet this current level where we are at right now. Sorry, let me get a ruler out actually. Let me use a ruler for this. There we go. We'd be looking at that level right there. All right. That would be our line in the sand. Then we could expect that move. So I've given you 3 different scenarios for a bullish scenario in as far as risk assets are concerned. Now, you guys, I'm not going to analyze all the charts that you guys are asking me about, because then we'll be here all day, even though I don't mind, but hey, I've got somebody's phone here. So this is why I analyze the dollar. All right. We're likely to see some dollar weakness, guys. All right. There's no, how can I put this? Because people often just say shit without, providing data for it or providing the facts for it. But here's my reasoning for it, guys. There is no fundamental data to support demand for the dollar in the near term. Okay. Even if you're saying it's a fucking sell on Dow Jones or on risk assets, then what is supporting your data? It can't just be based off technical analysis. Where are the buyers going to come from that are going to sell off their shares, their gold, their crypto holdings in exchange for fixed income, interest-bearing dollar-based investments? None. Because Powell said on Wednesday, guys, interest rates have peaked at 5.5%. They've peaked. There's nothing more to say, guys. What does that mean? Bullish on risk assets, guys. Bullish on fucking risk assets. All right, guys. I think I've come to the end of my presentation there. If you guys have any questions, please do send them right now so I can just answer. I'm not going to scroll all the way up because Jay has way too many followers and I cannot keep up. If you're looking to follow me, guys, I've pinned my handle to the chat. All right, we've got Wealthy Leo says, what are risk assets? Risk assets are any financial instrument that does not have safe haven qualities. So that the only 2 instruments that we know that have safe haven qualities is gold and the dollar. But if you weigh gold and the dollar, then the dollar is also, gold is also a risk asset because it is very interest rate sensitive. Any economic data that suggests that interest rates could go up is negative for gold. All right. So if I say risk assets, I'm talking Euro USD, GBP USD, USD ZAR, USD CAD. I'm talking crypto. I'm talking shares, indices, NASDAQ, all of that shit. That's risk assets. Yours truly, Amokhaleang says, write a book, bro. We need this wisdom. I'm going to do that for you guys. All right? I'm going to do that for you guys. You guys are all asking about gold. I'm bullish on gold. Like I said, bullish on risk assets, guys. It's a buy. It's a fucking buy, guys. It's a buy. All right? I see Kenosio here saying your mentorship, bro. Guys, if you're looking for mentorship, please do DM me on my handle. I've pinned it to the chat. So I don't want to discuss those kind of things here because we're here to talk about the fundamentals and the data. So yeah, if you're looking for, to understand the market the way I do, then yeah, please do DM me. All right, trading currency pairs with alpha markets. Okay, it's Romeo. All right. Shakir, shout out to you, man. The Ham Croissant says, this is embarrassing to watch. Bro, you're embarrassing to watch. What color is your M4? That's what I need to know. If you can answer that for me, then we can talk. What color is your M4, bro? Because mine is white and it has a wing. All right, let's go. Shout out to everybody who's been decent. I know on the internet there's a lot of mean-spirited people. All right, so shout out to everybody who isn't, so quick to say some shit just because they're on the internet. So shout out to you guys for being decent human beings. I'm loving the positive energy. All right, the Ham Croissant. All right, show us, my man. Your M4 is green. That's a shit color. Who has a green car? Like, who has a green car? Ish, atwala hisa it. Lala hisa it. All right, much love to you guys, man. More comments. He said buy gold, which means we buy US 30. Yeah, US 30 and gold kind of move in the same direction, all right, guys? So, like I said, I'm reluctant to say I'm giving you a signal because that's not what it is. But we've just broken it down and we've highlighted the base case scenario, and that is bullish on risk assets. There's nothing fundamentally that's supporting the dollar, all right? Even if we see some dollar strength, I think it might be temporary. Offensive Shady, I see you. I'm not going to read that comment out loud. That's my brother right there. Leadership is my brother. All right? I like his green cars. Yeah, people are negative for no reason, bro. Like why? Why would you dislike me? Look at me. Like, there's nothing to dislike. Like, dude. All right. Westrad_72 says, must we buy NASDAQ also? So, to answer that question without telling you to click buy or sell, it's easy. NASDAQ falls under risk assets and it moves in correlation with the Dow Jones. All right. So if it's a buy on Dow Jones, if we're bullish on risk assets, then definitely NASDAQ will also be bullish as well. All right. All right. Katido says, do you think there'll be a rejection? Yes, I do think, bro. I really do think there'll be a rejection, especially if we're talking about the US 30, the chart that I just broke down here. Then I really think we'll have a spike above that range because we're at a potential double top scenario here, all right? Starboy, shout out to you, man. Shout out to you. Offensive Shady says, we need a book, please, of risk assets. Yeah, nah, dude. I really need to write that book. Yeah, I will, guys. I will, all right? I really, really will. All right, Marshall says, the luxury of having passion well broken down. Thank you, brother. Man, it's a pleasure, man. It's really, really a pleasure. I really enjoy what I do. I really, really enjoy what I do. And that's why I keep saying my shit is the best in the city, man. Nobody's going to give you this kind of information in such an easy to understand way as I can. I believe I'm really, really well equipped to do this because of my journalism background, because I'm so well articulated and stuff, but the healthy understanding of the market as well, in combination with the language aspect, it really, really comes well together, if I do say so myself. All right. If you're looking to follow me, guys, it's Mr_YEC, sir. I've pinned it to the handle. To the chat. All right. Baby boy T46 says, are you sure with the buy? So here's how I answer all of these kind of questions. We're never sure about anything, all right? If I was sure about anything when it comes to the markets, I'd be rich as fuck, man. I wouldn't be here talking to you guys. I'd be on the beach somewhere if I was sure. We're never sure, guys. Markets are really unpredictable, and that's why it's a good thing to manage your risk accordingly, okay? Let's not blow. All right. All right, Matt Dave, shout out to you, man. Matt Dave says, I wouldn't mind paying for your mentorship. Shout out, man. All right, now, guys, please hit me up, man. Please hit me up. I'm starting a little community where I'm teaching people how to understand these kind of things, because 90% of traders look at the charts and the data and they make all their decisions based on what the chart is saying without understanding that the patterns that are being drawn on the charts, these head and shoulders, these double bottoms, these rising channels, all of that data, all those lines that are being printed out by the fundamentals. They're being printed out by the supply and demand dynamics.